Welcome, welcome, everybody. I'm so excited to have you here for our inaugural episode of Zen Money Monday. And I'm here with my friend Pam Prior, who I'm super excited to introduce you to. Pam has a plethora of experience working as a CFO at very high levels, Fortune 50 companies. She's seen a lot of really big business. She's seen a lot of really small business. And I wanted to bring her on to talk with us about what she sees going on in businesses and the good, the bad, and the ugly. And we wanted to be able to bring to you a conversation that we have had for a long time now, which is how we see businesses from the financial standpoint and maybe how we can help you start to see your business a little bit more clearly in that way. So welcome, Pam.
Thank you so much. I'm really, really glad to be on this with you. It's fun to take our conversation out to some folks that it might be able to help a little bit.
Fantastic. Okay, so the first question always is, how did you get into this work originally? I just want people to get a little bit more of your background before we dive in.
Okay, so I had a fantastic career that I loved in industry for more years than I care to admit, over 25, let's just say, and enjoyed every minute of it. But there came a point in time where I started to feel like there were ways to do business that were profitable and also benefited the employees and the team as much as it did the client and the bottom line. And in industry, I just hadn't been able to effect that from my role, except maybe in some of my teams, which were a subset of a larger company. And that had gotten to the point where it was a little bit of it'd always been a little itch, and then it got to really be raw and sore, and then it started to blister, and I thought, you know what, it's time to go where I can really make a difference. I got a ton of knowledge about finance and how to run a business and all of that. And there's this entire world of entrepreneurs out there who don't have access to the kind of financial help that they should have access to. And I knew that even though you're never going to take the bureaucracy of a Fortune 50 company and like dump it on top of a startup company, the concepts and the principles were exactly the same. So I've had a lot of fun over the last almost 3 years now, taking all of that and chopping it down and making it very manageable, entrepreneur friendly, and accessible to entrepreneurs of various sizes. And my clients now range from the I got a group of 6 figures, a group of 7 figures, a group of 8 figures. And I focus a little differently on each one, but quite frankly, the basic tools are the same. So this is just I've loved every job I've ever had, but this feels like it's just been the best 3 years of my life.
Let's talk about that for a second, because part of the goal of this show is to really look at business building from the back end. And it's a very different thing to work as the sort of, behind the scenes number 2 person around finances as a CFO versus being your own boss. What what is the difference that you're seeing in this role in doing kind of the same work for people, but in a very different format as your own business?
That's really interesting. And I think there's a little bit of my ego comes into play there, which is kind of cool, right? So I always loved being the number 2. In fact, I thrived on it, talked about it. Gina Catalano's book, Tandem Leadership, really taps into that really well. And it's a thing I thrived on, and I didn't really want to give it up, because it's just one of those things I've loved, taking a crazy visionary entrepreneur's madness and turning it into something that can kind of clean up behind them and yet continue to propel them forward was part of the game that I loved. What I've been able to do now, instead of doing that inside a company where I may or may not be listened to, and here's where the ego comes into play, now I come out to work with entrepreneurs who know I'm coming to the table with something they don't know right now and need the help with. And so I get to play that role and adapt it to them, but they do what we're suggesting. They do the stuff, they do the work. It doesn't get tied up in politics or profitability. It does get tied up in profitability. I don't mean that, but there aren't political boundary-driven decisions happening. It's all, oh yeah, that is in the best interest of the business. I'm not trying to manage this quarter over quarter, share price so that I'm making stupid decisions so that I can have a good investor meeting next month. But in the long term, it's going to hurt the company to do A, B, C, or D. So That's what I'm really thriving on, is just that energy from these entrepreneurs is tremendous. And I still get to be number two while feeding my ego sort of as a number one.
I love that. I think that juxtaposition is really interesting because for those of us who have spent a lot of time in support-based roles, it can be really hard to figure out this balance around stepping out as an expert and stepping out as a leader around the conversation. You know, you're embedded to a certain point, and this is the same for me as well, which is why we love talking about this together. But you know, when we work with people, we're embedded in their business to a certain extent if we're helping them take care of their finances and give guidance and, you know, whatever version of work that we're doing with them. But at the same time, it's not our business itself. It's not, you know, they're not writing our paycheck in the same way. And it's a very different dynamic. And I wanted to bring this up because I think a lot of our listeners are very much in the space where they probably don't have staff themselves. They may not be paying themselves payroll yet. And you know, you can go a long way before you get to a point in your business where you need to have, you know, a team that's just within your business, that you're hiring people for full time, for example. And in this online space,
sorry about that. That's my office staff. Speaking of staff.
I so love that we can edit that out. And in this online space, a lot of times we can have teams that are all over the world. They work with us, maybe not entirely with us. And so we're not fully responsible for them. And it creates a very different dynamic in the financial team. Do you feel like it's harder, easier, just different to work this way as a CFO?
What I find about it is I'm more committed to it because I know when you're a part of a large hierarchical organization, you're like one cog in a wheel. It might even be a big cog, but there's so much other than just the business owner, his or her goals, and the right thing to do. It was a different game, right? I got very good at politics, not in a bad way, but in a good way. Politics is getting people to do what they need to do to spite themselves, in my humble opinion, in corporate America. And I got good at it, but I don't have to do that here. Here, I find it, easier or harder is a little tricky, just different. The key is to, the balance, as you know, is to really grab onto that business owner's personality and how they learn and how they see things and how they work, and adapt what you need to deliver to them in a way that meets their style. And I find that really challenging, but fun. And it doesn't always work the first time. I remember one client I had, you know, we got everything all set up, and the first meeting I had with them, they were just like, this sucks. You know, what am I paying for? And I'm like, okay, stop. Good. Tell me exactly, you know, give me all your complaints one by one by one. And I learned from that call, that's their personality. Reframed everything. And a month later, the call was, oh my God, that's the best hour I've ever spent on my business. So that sort of getting them to understand that finance can adapt to you instead of you having to adapt to some green eye shade accountant is just a huge high. So it's challenging, but I don't know that it's harder.
Yeah. And it's fun.
A different challenge. Yeah.
It's a different challenge. And I agree. And I think it's important for people to understand that. And one of my big frustrations, and I know it's one of yours too, is that the financial service industry, whether we're talking embedded in a big company like you were, but more importantly, the kinds of people that, you know, solopreneurs, small business owners, you know, especially again in this online space, who might be working with, you might have a bookkeeper, you might have an accountant, you might do all of it yourself. But if you're working with somebody, a lot of times those people are trained to work in a very specific way. They're trained to present your information to you in a very specific way that works for the accountants of the world and the financial reporting pieces of our world, but it doesn't actually give the business owner the right story all of the time. And I think one of the things that you do really well is help people capture, and I've learned a lot in watching how you do it too, in terms of helping people capture what they need out of their numbers to make smart strategic decisions without it feeling overwhelming or like gobbledygook because they're looking at a profit and loss that has a bunch of codes on it that doesn't mean anything to them in terms of how they think about their business.
Well, I think that you hit the nail on the head with the word story there. Like every business owner is building a story. And what you want to provide them is the tool. You know this. Your job is to provide them the information that helps them tell that story and live that story. And that's the coolest part about it, is figuring out, how do I translate this into his or her story, as opposed to, some accountant's image of it. There's so many people I talk to, not just clients or people who are thinking about becoming clients, but just at these events that we go to and you meet entrepreneurs, the frustration level with bookkeepers. It's like, you talk about what you do. Hi, I'm Pam. And inevitably the conversation swings around to what you do. It's like, oh my God, I hate my bookkeeper. Or I've tried to hire bookkeepers, or my great aunt is my bookkeeper and she doesn't know what to. It's like they automatically go to bookkeeper. And I get that. And that's the sin kind of in the way the financial services is presented, because what they should be able to go to if they're getting served right is, oh yeah, my financials tell my story. And I don't care whether it's coming from your bookkeeper or your accountant or your clerk or you or, whomever. And I'm really particular, as I know you are, in finding the bookkeepers that get that before I recommend them to a client, because it's just so important that they do it in the way that makes sense to the owner.
And I think the, part of the disconnect and part of why I want to have this conversation is so that people understand that there's a million different ways to look at your numbers and to look at your money and to set things up in a way that feels good for you. And I think a lot of us don't know that. And so I have these conversations with people too. And often it's around, I just don't know.
Mm-hmm.
I don't know what this is supposed to look like. None of us are really trained in the double entry bookkeeping world. None of us are particularly trained even in just good money management. And so it starts to feel really overwhelming when we put it in the crucible that is business ownership.
Love that.
Right?
Yes.
And when that happens, I think a lot of people just kind of shut down. And say,
on top of that, they're all shutting down knowing that this is something I really need to know.
It's super important. Yeah, it's super important. But I find it really frustrating, and it doesn't seem like anyone can help. And we are here to tell all of you listening, there are plenty of people to help, whether it's me, whether it's Pam, whether it's somebody else, but you actually can control this conversation and you can get the information that you need out of your business. Because when we talk about making strategic decisions, it goes something like this. It's not just words. It's like, is it a good idea for you to go to that new event? Is it a good idea for you to hire that next person? You may be strapped and feel like you can't do it. But we may be able to say, you know what? If you shift a few things around, it's completely not only possible, it's going to be in your best interest, and here's why. A lot of times people make decisions based on this gut feeling that may not actually be true. Bingo. I don't know if you see that as well.
I do. In fact, I love this conversation because I was doing some work with the guy who was doing some of my marketing. And so he had seen me do a spiel on how to use the cash flow model, just the basic 12-week cash flow model, which is, really simplified so that anybody can do it. But it is exactly the same tool I used in Fortune 500. So there's no different, but it's just modified for an entrepreneur. And because he was doing my marketing, he had access to it. He said, do you mind if I use this for my business? I said, heck no. I said, please. And then give me feedback on what works and what doesn't. And the next time I talked to him, he said, I was pretty sure I had to dig in and work right through the holidays, Thanksgiving to Christmas and into January, or the sky was going to fall. He goes, I just did this forecast. And even if I didn't get another client, I just kept the client base I have. I could theoretically take the next 4 weeks off and spend it with my family. I was like, wow, that's a tool that works. So there are those tools out there, and people who have them and teach them, because that's what entrepreneurs really want to know. When can I hire somebody to help me? How quickly am I going to make the money I need to make? How much should I be spending to make it? And hey, I really like this particular membership or event and I want to go. Can I? Those are very.
And not only that, how can I pay myself? Can I pay myself? What does that look like?
And what would make an event that I went to like that beneficial to the business? What's the return on it? And can I pay myself? Question number one, pay yourself first.
I was going to ask you what you see as the biggest issue facing the entrepreneurs that you work with, but as a sidebar, that's actually one of the biggest ones that I see, which is around people either taking out too much money from their business that they can't afford to take out, and they just don't know better. They don't know the difference because they're not reading their numbers. Mm-hmm. And I don't mean to say that as a shame on you, you're not reading your numbers. I mean that to say as, again, most of us aren't trained in this. We don't know.
Right.
So they're either taking too much out or they're afraid to take anything out. And either way, it's not in our best interest, because presumably we're doing all this really hard work to help other people, but we're also doing it to put food on our table.
Bingo. Bingo. Yeah, that's really true. I do see that. I see it more in non-clients that I talk to, because frankly, as you know, once you've got a client on the under having financials that support them, they understand that and they see that, and that kind of problem kind of goes away. But in prospects and in people that I meet and talk to at events, it's that overwhelm, and it's either paralyzing them from taking money out, or they're just taking so much money out that there's no way their business could ever grow. And finding that balance is not as hard as it sounds. But if you're looking at your finances going, I don't even know what the first step is, then it's very easy to get caught in one of those two scenarios.
Just for our listeners' edification, what do you feel the difference is between somebody who has made, say, $200,000 to $300,000, revenue in their business, multiple six figures, versus having, crested that nirvana of the 7-figure mark from your perspective?
So I kind of see break points that happen. And the first one is at like $250,000. And the next one is at like $1 million. And it's a different set. As a friend of ours says, the problems don't go away. The problems just change, right? Up until 250, we're trying to put food on the table and not kill ourselves. At 250, we start to hire those first couple of people and get some stuff that's recurring and start probably still working a little burnouty, wearing ourselves thin, and there's some control. We got some control issues we can't let go of. And I'm guilty of that, so I get it. But once you hit that $1 million mark, there's something about that 7-figure mark that makes it very clear that you've crossed from a consultant or a coach into a business. Now, it may be a business of coaching, but you've done something, because you can pretty much trade. If your billing rate is, let me just remember this now. If your billing rate's $500 an hour and you work a standard 40-hour week, you can get yourself to $1 million by billing every hour of the year at $500 an hour. But you're trading time for money. $1 million is the first place where you hit that hard ceiling. That is, I either have to raise my price per hour that I'm in it. And I don't mean you bill that way. I don't mean that you bill price per hour, but you're always calculating it in your head when you're a consultant or a coach. And once you hit that threshold, okay, I'm a business now. I got to have something I can replicate. And things move from, first of all, you can pay yourself usually comfortably. So you take care of that. And now it's like, oh my God, I have money. What do I do? I need help, because I'm going to waste it. I'm going to lose it. I'm going to do something else with it. And the interesting thing I find with these 7-figure folks is the first thing they say is, I just want you to give me a budget of how much I can spend a month and still meet my goals. That's all I want to know. And you start with that, but they realize they really want a lot more than that. And that's great. But I start out with okay, you can spend, $8,000 a month or whatever it might be, in discretionary stuff. And that's kind of what they want. But it's a different set of problems, and they're just as real as those I don't have a penny to my name problems. And then when you get to 8 figures, it's a whole nother set of problems that they're wrestling with, and loss of control. And now the organization's big and you have employee issues, and you sometimes I will tell you, every single 8-figure entrepreneur I know has at one point or another said, I just want to go back to consulting. I just want to close this thing down and go back at least once. They don't mean it. They don't hold on to it forever, but it's exhausting in its own way.
It is. My dad has a medical manufacturing company, and I had a partner for many, many years. And that partner legitimately got to a point where he was actively trying to reduce the size of the business, because the management part of it was just really overwhelming for him. And I think there are two things that happen. We can either decide that we're going to learn how to do that and do it better and see it as a challenge, which many people with an entrepreneurial mindset love to learn new things, and they're up for new challenges, and so they go for it. Or we can make that choice and say, you know what, I'm good with a $400,000 business that has very little overhead and puts a couple $100,000 in my pocket, and I'm fine with that.
Mm-hmm.
My goal, and I think your goal, is to make sure that people understand the difference so that you can make that choice consciously and conscientiously, instead of being at that 8-figure point feeling completely like you're trying to breathe underwater and have it feel super overwhelming.
You really reinvent. You really have to choose to reinvent yourself at each stage of a successful business, because the hustler who gets to the first 100,000 is a totally different person than the person who steers it from 250 to $1 million, is a totally different personality than does it from 1 million to 5 and then on to 8. And then quite frankly, once you're above that, you start to get into mergers and acquisitions and a whole. So what each person's got to decide is, what is the strength or the trait or the characteristic that you have to have? What do I like and not like to do? And make sure that you are the person who likes to do and has the trait or can learn the trait for the next thing up the ladder. And some people are very clear on that and just sail through it. And others get to a point and go, nah, I don't really want to do it. And then they can sell their business and step off. But it really running your business and having other people run your business while you watch are two very different things.
Well, for sure. You and I both know that from various different parts of our history.
Yeah.
What would you say to people who are concerned about letting somebody in around their finances? Because I see this a lot, and I'm sure you do as well. There's a significant discomfort about asking for help in this area.
Yeah. So a couple of things. One is trust is everything. And unfortunately, you and I have both had stories of clients who have been screwed over by financial people who know ways to take advantage of entrepreneurs. Fact of the matter is, they're out there. There are crooks out there. So with every CEO I worked with in corporate and with every CEO I work with now, there has to be trust. And if for whatever reason there isn't, it's just not a relationship that can, and has to be two-way, and it's not a relationship that can or should survive. So ground rule number one is there's got to be that trust established in the process of going through developing that relationship, because you're learning the most personal things about these people, and they have to know you're a vault. And if you have, excuse me, the staff's getting restless again. If you have clients who know each other, you have to be even more of a vault, because they have to know and believe and trust that information is never passing anywhere. And you and I know we have ways to make sure everything stays compartmentalized. Nobody sees anybody else's stuff, blah, 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 blah. So that's one thing. But to even get there, people have to get past this embarrassment piece. And I talked about this at Archangel a little bit, and the way I kind of help people or try to help people put that behind them is to say, looking around any room you're in, and I'm not a person who really deals in absolutes, but I will say with absolute certainty that whatever room you're in, for whatever reason, be it a restaurant, an event, your house, a committee meeting, every single person in that room has said at some point in their lives, I'm so embarrassed about my finances because I did blank. Yeah. And that can vary everywhere from filed bankruptcy to I don't even know my bank balance to I spend too much money on, I spend too much money on training I've never done. I bounced a check. I don't even know how much I make. I had, somebody today, I don't even know how much money I make. So the thing that I say is, get over it. It's like, you honestly said, I say, think about that for yourself. How are you feeling in that blank, right? I'm so embarrassed, but boom, what's your thing? I said, and now look at the person next to you and know that they filled in that blank too. So nothing you've done is worthy of anybody's judgment. And anybody who is even thinking about judging you, they're not judging you. They're thinking, oh shit, I did this. So let's put that behind us. There is nothing to be embarrassed about.
I love that, because it's such a common thing that to automatically put ourselves to assume that we're doing it worse.
Right.
And I get that a lot too. People kind of coming up, whispering, I'm the worst ever around money. And my response is always, that can't possibly be true, because everyone says the same thing. Mm-hmm. So I think
there's only one worst, and I'm guessing we haven't met them.
Right. So I think both Pam and I want everybody listening to know that if you take away nothing else from this episode, it is that cut yourself some slack because it's not as bad as you think it is, and it can get better. And not only that, but it's not representative of who you are as a person. It's just
Bingo.
a tool that we can use. And so we can use it well or we can ignore it. I hope that you want to start to learn how to use it well because it will help you grow a better business, but it doesn't reflect anything on who you are as a person.
Yeah. I mean, if you take it all the way back to barter days, all it is exchange of value. Instead of giving you cheese for a cow, I don't know, cheese for a pig, I'm handing you $10, you're handing me $10, and I'm taking your pig and you're taking my cheese. It's really all it is. And if the object is to have what you need to be able to create your superpower value in the world. And that's the way we talk about it and think about it. And it's funny, we talked about the embarrassment piece. You know, in fact, a friend of mine sent me a mug that says Hallway Pam, because when we go to these events or on stage or whatever, and for example, you'll have a breakout on finance, people don't want to go to that corner because they're like nervous that they might say something that might be embarrassing or that they might look stupid. And my answer is there's no way to look stupid, number one. But even though they don't come to that corner, you know this too, you're going to be walking down the hall and somebody's going to go, psst, hey, over here. I got to tell you my story quietly because nobody's ever done this before. And, you know, same thing, Hallway Pam says, yep, I can beat that.
And you don't even have to. It's more of that's where the vault piece comes in. But I think part of the reason that I wanted to talk about this, and I know we will continue to talk about it, is that there's so much taboo around the money piece. And so as entrepreneurs, as business owners, we're stuck because we want it. We want to make money. We want to understand how to run our businesses better, particularly around our finances. We know it's important. But then there's so much stigma around the conversation as well. So I'm really glad that we had a chance to talk about that. But I'd like to go back for a second to the trust conversation too, because I think it's really important that people understand that this two-way street part, because I know that you and I have both been in positions where it's very easy also to want to pass off the entire responsibility around your finances to somebody else. And I'm curious how you handle that when somebody wants to put you in a position where you're responsible for quote unquote managing the finances, but somebody doesn't want to engage with you in the conversation.
I won't have them as a client. It's that simple. And that's the cool thing about being an entrepreneur is I don't have to. And what I find that most owners really want is to know that somebody's watching out for the landmines and pointing them to the opportunities. And when they say, I don't want to have anything to do with finances, they don't really mean that. They don't want to have anything to do with putting together the books, generating the reports, you know, creating the information, but they definitely want to have something to do with finances because they need to use that information to inform their decisions. So 9 times out of 10, frankly, it's a semantics conversation. But the 10th time where somebody really is like, I just don't want to have anything to do with that, I'm not the right person for you because I'm only doing this if the information's meaningful to you. If it's not, I'm doing it for my own amusement. And
you have other things to do.
I've done enough of that. Yeah, I've done enough of that in my day.
Well, I think it's important that people understand that, you know, the whole point of working with somebody at a level of, well, actually at whatever level you're working with them at, but especially at a level that Pam and I work at in terms of not only are the day-to-day ticky-tacky things taken care of like bookkeeping and record keeping and taxes, but that higher level strategic conversation, which is really the realm of the CFO, the chief financial officer, is how do we take that information and have a meaningful conversation? So if you want to engage at that level, that's the perfect opportunity to talk with somebody who provides those kinds of services. But if all you want is to know that your taxes are done and there's money in the bank, you may not need that either.
Tax accountant and a bookkeeper can take care of that.
Right.
Yeah. And you don't need for it to be translated into your language then. And I honestly don't think any entrepreneurs out there really want that. I think it's just a term to say, I don't want to have anything to do with finances. And they kind of mean it, but they don't. Once it's broken down for them and they understand that information is really useful, like, oh, I can hire somebody 3 months earlier than I thought. all of a sudden they want to have something to do with finances, and they realize that's not really what they meant. They just
Right.
meant when they ask for something, they want it to look like the way they think about their business and not have to translate some report into their own language so that they can, it's almost like handing them something in Greek. I mean, not that there aren't Greek business owners, my apologies, but handing somebody something in a totally different language and saying, here's the information you need. They're just going to shove that in a drawer. And numbers alone are that. So I agree completely on that front.
Yeah, there needs to be a bigger conversation about what that information means and what you can do with it,
Right.
and just be able to make smart choices as opposed to, well, I did this thing because my gut told me that it felt good, but now I feel like maybe I made a bad purchase or I missed an opportunity, and that's the stuff that doesn't feel good. And I think that's really what our
Right.
role is, to help people feel
And you
really
may or may not
confident.
have. It may actually have been a good decision, but you didn't have the process in place to validate that for you. So you automatically assumed it didn't work the way you wanted it to.
Mm-hmm. Do you feel that there is a turning point for people when they start to think, okay, now it's time to maybe have a deeper conversation around my numbers and around my money situation?
Yeah, I found generally, there are some others, but usually three things tend to drive it. One is they're in a crisis. So they're, feeling like they're next up. If they're not careful, they're going to be filing bankruptcy in 5 minutes. And one is when, I'll say three. Two is when they know they're ready to scale. Like, it's like, okay, I've built this business now and it's time to scale. I'm pretty good at keeping things together, but I really need somebody to just get this off my hands and make sure I'm getting the information I need. And the third is what I call, and it's not accidental, but I call it the accidental millionaire, who basically wakes up one day and goes, oh shit, look at all this money. Now what do I do? And I get more of those than because it's like, I know I need to get control of this, because this thing that I created and that I'm passionate about is not just making me money, it's making me more money than I ever thought it would. And now I've got to think like a business person.
It takes on a life of its own and can feel very like you're just being swept downstream by it.
Right. Suffocating. And then you have people wanting to spend it for you, and there's no decision process in place about how and when the money should be spent. And all of a sudden you look at your bank account and go, how can I be $1 million business with a bank account with $10,000 in it? And they don't.
The cash flow issue.
Mm-hmm. Yeah. And they don't want to be that person because they've heard of nightmares, or it's already starting to happen to them. They're seeing their bank balance go like this as they're growing. And there are good reasons that can happen. But if you don't know why it's happening, it can feel like you're bleeding at the seams and the other shoe's going to drop.
I think the term is called growing broke.
Yeah.
And if you don't get a handle on it, that will just be the continuation. I mean, I've heard stories where I've been in the same room as you have been, where people are at 7 figures, even 8 figures, and they're taking home less than $100,000 a year themselves. Mm-hmm. That's a crime from my perspective. If you've built something that has that kind of momentum and has that kind of potential, and you're always struggling for cash and you're not paying yourself a healthy salary, then there's a disconnect in the background there.
Right. And you just have to either shrink your infrastructure or grow your sales, but there's something you can do to fix that. And that happens as well. So those are the three that tend to drive people, I think.
I think you're right. I'm curious on your take around, I heard this recently and I've been contemplating a response to it. And I'm curious what you think about the conversation. I think a lot of people feel like if they're going to bring in somebody in a sort of financial coaching realm, which is some of the work that you do, or even in a CFO level or, soup to nuts financial services work like we do, they feel like that person is going to tell them how to run their business and they're not interested in that.
Yeah, well, that's, one of the things I really make clear the very first set of questions I ask, and I think you're the same way too, is you tell me how you think about your business. You tell me what your goals are for your business and what your personal goals are from the business. And that's the first 3 pieces of information I get, because everything else I do, I frame up on top of that. But there often is that assumption that you're going to take over. But I think in early conversations, if you have those if you ask those type of questions, they pretty much know you're here to support them, not redirect them. Now, are there times where business owners are about to make decisions that are going to hurt the business in the long run? And do you have an obligation as a CFO to stand up and say and argue, if you need to argue, to say, you know, I really advise against this and here is why? Absolutely, you have that responsibility. And any good CEO, CFO relationship, any good owner CFO relationship is going to have that respectful, trust-based debate over things. It's not going to be that I'm trying to run your business, but I am going to tell you, you know, yep, if you take out that line of credit at such and such an interest rate, you know, and our forecast shows that you can't pay that back over a certain number of years, you just need to know here's the implication on A, B, and C. Let them make the final risk decision, but be present and don't just say, you can't be a yes person in a CFO role. You can't just be a yes person. But on the other hand, I never lead with no, right? If a CEO says something crazy, and CEOs say crazy stuff every day, every single one of them, I don't care if they're $20,000 business or an 8-figure business, they say crazy shit every day. I never
in the best possible way.
Yeah, absolutely. I love them. It keeps me fully entertained. I absolutely love it. They'll send me drawings on the back of napkins and I just chuckle and go, okay, let me see what this looks like and turn it into a financial model. And that's part of what I love to do. But because they're saying crazy stuff every day, they have to know they can do that and you're going to keep them safe. And that's where the trust comes in, because they need somebody, I call it the friend in the foxhole, who can make sure they're explaining to them based on your understanding of them, right? They've told you their risk tolerance. They've told you what their goals are. So you're not going to run their business, but you're going to keep them informed of what they're doing to their goals based on some decisions. So I don't know if that answers the question, but they are scared of it. All of them, that, you know, CFO is going to come in and try and run the place.
I think I appreciate your answer. I feel exactly the same way. I brought it up because I want our listeners to understand that you get to choose the kind of relationship you have, whether it's, you know what, I just want a bookkeeper to take care of stuff and I have an accountant and that's all good. You get to choose if you're working with somebody at a higher level, with people more embedded in your business, you get to lead the charge. But you also have to expect that that person, if you're working with somebody at the level that Pam and I work at, you're going to have to expect that they are going to, with your best interest at heart, probably push back sometimes, because, and that's part of what you're hiring them for, you know, to create a partnership that will steer your ship to bigger places, presumably.
Yeah, that's it. For the one-on-one clients that I take on, I do very few of them, but where I embed in the organization, that's absolutely the case. It's very similar to when I worked in corporate. That's the kind of thing, you know, when you're in a bigger company like that, then your role in that, it's not just the, usually there are multiple owners, so you're hired to protect the shareholders. I mean, that just gets a lot more complicated. But in the smaller businesses, you know, that it's often, they really appreciate the input that says, yeah, you know, that's almost right. Let's tweak it this much, and boom, then you don't risk X or Y, you know, you don't risk anything running off the rails.
Perfect. I love that. All right. So let's talk about something positive.
Yay.
I would love to hear from you. Not that that isn't positive, but sometimes people find this conversation a little
imagine. Can't imagine.
So this show is titled Zen Money Monday. I'm curious what Zen Money means for you as a longtime CFO.
I think you and I have the same end goal, and that is to bring owners, be it shareholders or business owners or entrepreneurs, confidence, clarity, and a real, I think understanding is the word I'm looking for, of the finance pillar of their business. And if we've successfully done our job, that's what they get: confidence, clarity, and understanding. And that, to me, that leads to peace. And to me, peace is part of the Zen balance. Without it, you can't kind of have that Zen feeling. And until you do that, there's this gray cloud always hovering over you. In every decision you make, you're second guessing yourself. You feel like a half of an entrepreneur. You're not really a business person. All of those things kind of muck up any chance at sort of a Zen feeling about your business. How about you?
Yeah, I think it's that in a nutshell, that there should be some version of it feeling easy. And for many of us, this area doesn't feel easy. It doesn't feel easy if we ignore it. It doesn't feel easy if we sort of half try to manage it, if we don't have the tools we need. So the Zen money piece for me is about being confident and conscientious around those choices that we make around our money.
Love it. Yeah.
Mm-hmm. That's so good. All right. So what is one takeaway you would like people to leave with?
I think the biggest one that's been jumping out for me lately is a lot of people have asked this question, and it's do I need to separate a business account from my personal account? And especially with coaches. And my answer really is an unequivocal yes. And there's two reasons. But one is that it actually gives you the opportunity to potentially get access to a little more credit. Because if you set up a business checking account, often they'll throw in a credit card with it. But that's the least of the two reasons. Putting the whole liability issue aside and all the legal stuff, from a psychological standpoint, when you set the business apart from your personal life, you really start to have a business and you start to think like a business person. I had somebody on the phone today who said to me, well, I know I should do a forecast, but I really don't know where the sales are coming from. And I think we all have that issue, right? I don't know where my next sale's coming from. So how do I do a forecast? And we've all been there. But if you've got a business and you've got a forecast that says I'm going to make X number next month, not I sometimes have money and I sometimes don't, but I need to make this money in March, this money in April, this money in May. All of a sudden that triggers you psychologically to say, I got to do something to make that happen. And it changes your whole mindset about the business from, I really can't forecast it. Money comes when it comes. And we've all been there, right? As one-on-one consultants, it changes that for you because now you got a number on a piece of paper that says, I'm supposed to see $17,000 in revenue this month for, smaller business, let's say. I'm supposed to see $20,000 in business. I got to know what I'm doing to get that. And it forces you to go through all the rest of the business steps you need to go through as a business owner. So definitely separate them. It's worth it.
I love that. Yes. First and foremost, if you do nothing else, it's easy to go get another account. It doesn't have to officially be a business account. Although
that's true too.
If you're not, if you haven't created an LLC, if you're working as a sole proprietorship and you're like, I can't get a business account or I don't know how to do that, doesn't matter. Just open up a different checking account and start putting all of your business monies through there so you can start to see what's happening, not only in your business, but it helps you manage your personal finances better too.
Sure does, because it cleans them up, doesn't keep them in both classes. And I don't fault anybody for keeping it all together, but what I found is that people get in that gray fog of, I don't know what's what, and it's all mushed together. And is my business making money? I don't know. It's covering my utility bill. And then it's so hard to get out of that trap because you're really not running the business. You're running your household and the business together. And that just contributes to that gray cloud mush. So it's a very easy thing to do to just set it up separately. And then all of a sudden the clarity, like this woman that I was talking to said, oh my God, I do think about it differently. I can't just say I can't forecast what money's coming in. I got to make money come in.
Which
I'm a business owner.
You have to drive the wheels from the top down. Exactly. Right. Plus it makes taxes easier. It makes finding all that information easier because it's not all in one
so much bucket. Else just falls into place if you take that first step.
Perfect. Well, Pam, thank you so much for joining us today. If people want to connect with you, where can they go?
The best place to go is to find me on Facebook. There's a group. There's a Pam Prior Priorities Consulting group on Facebook. But if you really want to get in touch with me, let's do an email. It's Pam, and it's at prioritieslllc.com. I'm guessing you're going to throw that in the show notes.
Yes.
And I will get back to you directly because, like I said, whether you're in a group program with me or you're one-on-one, the key is trust. So that I'd want to meet you and talk to you in person and get to know you a little bit.
Perfect. Well, thanks again for joining us. Hopefully we'll have you back at another time and we'll continue talking about this concept of, what do your CFOs see when they look at your business and how can we help you do that a little more clearly with a little better understanding. Have a
Can't
great
wait. This is way too much fun. Finance
way
is
too much
fun.
fun. Thanks so much. Talk to you guys soon.
Take care.